Just to give you a heads up on the results for FY16 for Cleanaway, revenue was up 5%, EBITDA was up 22%, EBIT up 26%, net profit after tax and EPS up 38%, cash flow up 168%, dividends up 13%. So overall, encouraging results, I would say. I think one of the things which people quite commonly ask is what is so special about Cleanaway? And I think one thing I always refer to is, just at a base hygiene level, you're looking at a company which is number one in its market sector. It's a pretty decent sector to be in. It's absolutely linked to your GDP. Has a high fixed cost. Waste management company is generally high fixed cost business. So once you've invested into those businesses, the operating leverages are very, very effective, which we are seeing, and which if you look at most global waste management companies have excellent operating leverages. I think the other fundamental issue which you should worth reflecting on is that if you had unlimited amount of money tomorrow, you cannot create another Cleanaway. And the reason is the value in this is not only just in asset price on balance sheet, but which comes from EPA permits. So we have 200 depots all over the country, and 90% of them have some kind of an EPA permit, Environmental Protection Authority permit. So, and you can't get those permits. Some of them you won't even get it. It doesn't matter how much money you have. And if you want to apply for them, it takes multiple years to get it. So there's a very natural barriers to entry in this business. So if you're performing well, you're a market and a brand leader in any sector, in any country in this sector, generally, and you're performing well and your operating leverage is high, this is a very attractive business from a growth perspective. Okay, couple of things I would also just cover that at a headline level before we go to question answers is that we also announced at the results that we are now working on our 2025 footprint. What fundamentally this means is that the waste business value chain goes like this. You collect waste, whether it's general waste or liquids, hydrocarbons or hazardous or non-hazardous waste, you process or recycle it, and then you either take it to landfill. Where the world is generally moving towards zero landfill, not as yet, but there's a whole study around, well, we have to avoid going to landfill. Companies like us become kind of a material management company. Our material happens to be waste. You pick it from one end, you take it through a value chain, and you avoid as much as possible going to the landfill. And having those assets in the middle to be able to extract value is where the game in future is. So in that regards, we said at the results that we are looking at a footprint 2025, which almost 9 years in advance now, what this could look like, so our investments could be a lot more predictable.